Good morning everybody, and this is your S&P 500 day trade setups for today. So a couple of things happened yesterday. So obviously it was mucking around doing nothing, and then going into close we sort of had this bit of acceleration to the downside. We have reached a level which is going to give us some support, which is this area here. But again, as I've been saying most of the week, oscillators are overbought, so you would have expected a pullback. First pullback we were expecting was this one here. That didn't really materialize. We sort of bounced off it for a bit, but basically just formed a flat bottom triangle, which we broke through. So that measured move is done. The next step that you need to do is we need to look to the left to see where is the next area of support, which is down here. So you can see there's a swing low there, there's rejection there, there's rejection there, more rejection, and then support. So this is the zone we're waiting for. Remember, we've got non-farm payrolls today. So in the bigger picture, we are still in an uptrend and kind of just having a bit of a pullback. What we're looking for, anyway, what I'm looking for is an opportunity to buy into this. And we'll get to the levels now in the lower time frames. But before we get there, I was actually wondering, sitting on my my Zwift trainer this morning, wondering how many of you guys are out there that are also on Zwift in the mornings or in the evenings training. Let me know in the comments. Maybe we can have a Dilligaf ride on Zwift. Anyway, moving down to the 3 hour. You can see we have got to the level, and this is the level we need to pay attention to. It's 45.50, round number as well, and then we've got 45.22. I would go as far as to add 4,500. Okay, now you do know that we have only got two moving averages on here. This is the 20 and the 200 moving average. Just same kind of scenario that we use, same kind of crossover strategy that we use, but anyway, it's just trying to keep it a little bit cleaner based on what we're seeing at the moment. So just using the 20 moving average at the moment instead of the usual 33. At the moment, you can see that is the area that we need to pay attention to. Now, the weekly at the moment is big up, big down. So at the moment, that is looking like a pretty big pin bar. But look at the 3 hour oscillators at the moment, grouping nicely to the downside. At the moment, diversions between this swing low and this swing low here. If we drop down to the levels we need to trade, it tells a pretty, not say serious story, but it tells a story that you can believe. So you can see gentle, just gentle, not knowing anything. Then we broke through this key level here at 45.92, or should we say 4600, and then we had this exhaustion bar down towards a 200 hour moving average. So basically the 155 EMA is in the same area. Look at my oscillators, grouped nicely, nice little inside bar going into the close. I suspect another leg down, probably just to find some support in this area. So this is the area that I'd be paying attention to after non-farm payrolls, guys. So it's not worth jumping in at the moment. You know, the trend, if you look at this on the 15 minutes here, you'll see pretty much one-way traffic. You can see where we got the crossover of these two moving averages, and then just sort of accelerated the downside with going at the close, this big sort of exhaustion move into a level. So personally, I think 4,500 is also definitely an option. So depending on what non-farm payrolls does, more than likely a big move down to 4,500, and at that point I'm a buyer, to be honest. It's the higher time frames is all indicating we need to be paying attention to the move. So let's get to the hour. What I'll do here is just come back to our normal template, and you can see the only difference here between those two strategies is that the crossovers happen far apart. So this is on the hour. You can see we've got a crossover, and that's not far apart, but further into the move, just because the moving averages are slightly higher, but principle is exactly the same. You can see it's 155 and the 200 is exactly the same. Anyway, so levels are pretty much the same. You're looking for 45.50. Well, let's just get back to the 8 hour. You can see we've got a clear crossover of everything on the 8 hours. So first area is right where we are, second area, and I'm picking it up off this swing low here because you can see the interaction here. So the minute you start dropping down into any of the lower time frames, you look at the 30-minute, you can see we've spent 2 days here basically mucking around here, and that is the zone we need to pay attention to. Remember one thing, the bulls are looking for a weekly close above 4,600, and at the moment they have got a pin bar rejection which they've had there, had supports at these in this zone, and then they've had rejection in this zone. So the key here is a weekly close above 4,600 before we start looking for highest moves. And then the second thing you need to bear in mind is we do have a flag break. We don't have the flag retest. So, and yeah, the retest would be down in this zone here somewhere. It's 43.50, but I don't think we're going to get there at the moment. Have a look at the weekly oscillators. Crossed over above the 20, and if we sort of finish like that, this is you're expecting a bullish move back to the upside for the oscillator. So every time this has happened in the past, you can see on the weekly, and this is where the stochastic crossovers really come into their own, and that's on the higher time frame. So typically the daily, weekly, monthly, 8 hour, this is where you see good indications of what you need to be paying attention to, especially in the US markets. You can see as far back in time as I go, I'm already back to 2009. Every time we grouped here, okay, this 2009 was probably or 2008 financial crisis. Basically, we had the only time where we've had 3 attempts at it before breaking to the upside. Okay, so just keep that in the back of your mind, guys. There's definitely there is a bigger move coming, and I can't see this. This is the end of the quarter now. So, and if you take the end of the quarter, what does that quarter bar look like? It is pretty much a red pin bar. So you're going to have this red body here, and then depending where we finish today, this is going to be the tail, because our close will be up here. So that's kind of, that's a pin bar. Anyway, trend is up. There's no two ways about it. This is just a really volatile pullback that we are experiencing right now on the market. So yeah, looking for anything between 45.50 and 4,500. We're looking for that first. We should find some support there. Good opportunities to buy into it. Wouldn't hold over the weekend, but once you've bought into it, you could sort of take your profit, and then Monday look at it again, and then you can start holding for the week on 1 or 2 positions. Hope that helps you, and we'll catch up with you on Monday. Enjoy your weekend. Cheers for now.